All right, guys. So once again, the due now is what's here under April 2nd for Mr. Hood for our meeting with him tomorrow. If you've finished that, in the chat window, I am posting an article that I got this morning. Please read that and have a few comments ready to discuss that. We'll discuss that for probably about 10 minutes after your due now. We'll discuss this article for upwards of 10 minutes. Then we'll dive deeper into your corporate debt slide presentation that's due next week. All right. So I'll give you guys a few minutes. Let's say 3 minutes to finish the April 2nd due now and to read this article, which I just dropped in the chat window. Sound good? Hello? Can anybody respond? Confirm that you've heard. You're muted, but you guys can unmute yourselves. Yes, your mics are off, but you can unmute yourselves. You can also type in the chat box. Okay, so you guys heard it. All right. So, see, this says allow. This says you guys can unmute yourselves. All right, hold on. Let me turn it off and on again.
Yeah, now we can.
Okay. All right. So there you go. That's all set, but that doesn't matter because I'm going to mute myself now anyway. I'll give you guys till 11:36, so 2 minutes. Finish up the due now if you haven't, or at least get it started, and then click on and read again this article. We'll discuss that. 11:36, 2 minutes. All right, let's go to work. So the questions I'm not too concerned with. Just a little preview and heads up again for tomorrow. Tomorrow we will get started bright and early. We'll have Mr. Hood with us. Please make sure that you guys have your questions already done. I cannot promise we will have him for more than 15 or 20 minutes. He's going to try to stay for the whole duration of both classes. He cannot promise it. It depends on his schedule. It depends on a number of different factors. Tomorrow, the Paycheck Protection Program starts, which is what Donald Trump signed, which is basically giving all of these small businesses the opportunity to apply for those loans. So he's going to be busy tomorrow. Whether or not he will have much time for us is unknown. So hopefully we get some good time with him. But if he's waiting for questions from you, or the questions you ask are not as in-depth as you really had wanted, it becomes a risk, right? Because a risk for you guys, because then it's a concern of whether or not he's really helping you guys much, or if you're making up some BS questions. So please make sure you have those questions done. Let's move on and let's take a look at this article. You guys read this, I assume, since I posted it. This to me is really interesting. I love it. Talk to me a little bit about what you read. Somebody unmute yourself and just give me a synopsis of, first, is Carnival getting a bailout from the United States? Is Carnival Cruise Lines getting a bailout? Yes or no?
No.
No, William, why not?
Because it says that they're incorporated in Panama, so they don't pay any taxes to America.
Right. So they're not incorporated in the U.S. They don't pay U.S. taxes. They're not a U.S. company. Therefore, they're not able to get the U.S. bailout.
Mm-hmm.
That has a lot of implications, right? So first, before we talk about what that means for them, why would you incorporate in Liberia or Bermuda or another nation or the Bahamas? Why would you incorporate there?
So you don't pay income tax?
Well, you'll probably pay tax, but just probably pay significantly less, right? They don't want to pay the astronomical U.S. taxes.
Okay.
So
also, it's because of minimum wage. They don't have as high a minimum wage as the U.S. does.
Say that again?
That another reason would be the minimum wage, because it says that the other countries that they're incorporated in have a significantly lower minimum wage.
And minimum wage. So imagine having to pay, and I hate to put it like this, imagine having to pay someone who I mean, how many workers do you think they have on a cruise ship? Hundreds, thousands, between all the, between laundry and between making up the rooms and food and cleaning the pools, and then entertainment and chefs, and if they have events, it's a lot of money. And to pay someone minimum wage, and to pay a lot of people minimum wage, is expensive, and that'll cut into your profit margins. So hell yeah, that's a business decision. Hey, if we incorporate somewhere else, we pay less tax, and we can pay them less money, and we don't have to worry about the U.S. government intervention into our business, because they can't investigate us because we're not a U.S. business. Great, sign me up. Then the world comes crashing down, right? Then the world comes crashing down. And the first place you go to is the U.S. government hoping for a bailout. And that's where you are here. So Carnival Cruises is not getting a bailout. What are they doing instead? Daniel?
They're trying to get $3 billion sold in bonds.
All right, so before they did bonds, there's two things they're doing. One, Daniel said, is bonds. Ham, what's the other?
Sorry, they're trying to borrow billions.
So they're borrowing $3 billion. That's a credit line. So a credit line is basically, it's kind of like a credit card, like that you don't have to use. Like imagine me saying, hey, Ham, here's a bucket of money. If you want to tap into it, you can. You don't need to. But it'll always be here for you. So here's a bucket of money. Here's the bucket of $3 billion that somebody's offering them as a credit line. Here's your $3 billion. You don't have to use it, but you can if you want. You can pull some out anytime. Well, they're tapping it now. They're tapping almost all $3 billion to utilize it. Okay? Ethan, yes, question.
Is it considered a type of debt anyways?
Yes. Yeah, so I have, like with PayPal, I have like a $10,000 credit line. I mean, I have a good credit score. So I guess they're like, hey, if you want to borrow money from us. Why not? But I don't have to use it, right? It's basically a credit line is kind of like a loan that they give you that you don't have to use unless you actually reach in the pot and grab the money. But once you reach in the pot and grab the money, it's kind of like a self-determined loan. So Ethan, imagine you're starting a business and they give you a $100 million credit line and you only need $3 million. You can operate without touching that credit line for 3 years. And then you decide, we want to grow. I'm going to reach into that bucket and grab $3 million. You can reach in, that bucket is still available. You grab it, and then you just start paying your interest on it. And then you'll still owe back your principal plus interest. So it's almost like a loan, but instead of saying, hey, I need this much money, you're basically saying, hey, give us a bucket of money. We won't touch it until we need to touch it. So this is
Okay.
basically, yes, a loan. But the way you apply for a loan for a mortgage for a house is a very specific dollar amount, right? When you swipe your credit card, it's a very specific dollar amount. A credit line just says you have access to this much debt. Take it whenever you want.
Okay.
They're taking the hell out of it now. $3 billion of it, all of it. All right. So then they realized, damn, $3 billion is not enough. So what do we do now? Daniel, explain this one now.
So Carnival started selling 3 billion in bonds with the really high APY.
Yup. Why? What's the APY?
12.5.
Woo, baby. 12.5. That's a lot of money. Why are they selling it at a 12.5% interest rate?
Because it's really, really risky.
And it's attracting investors.
Hell yeah, it's risky. And heck yeah, it's going to attract investors. How many of you would buy a Carnival Cruise Line bond today for 12.5% per year?
Nah.
Type number one in the type of money sign in the chat window if you would. I'll go first. Money sign. I'm all up in there. I'm diving head first into it. All right, we got a lot of people that are willing to take that money. Okay. This is kind of what I imagine myself looking like. That's me diving right in. 12.5%. You guys can see that GIF?
Yeah.
Yeah.
Yeah, you guys know what show this is?
What did you say?
Do you guys know what show this is?
Isn't that Mickey Mouse?
That is not, that's a duck.
That's
No,
Donald.
I don't know, but like
Donald
part of
Duck.
the
It's too
Oh,
Donald Duck.
whole chronology and stuff.
That is not Donald Duck.
This is
Isn't that part of the show?
I forgot the show. I'm sorry.
Oh my God. DuckTales. DuckTales.
Okay.
You guys are terrible. You guys
Oh,
are so young. God. What is your childhood like? Terrible. Thank you, Gabriel Tasneem, for DuckTales. Appreciate it. Okay, so I imagine diving into a pool of money like DuckTales. Here's the problem. At some point, Scrooge McDuck, who you just saw, is going to dive into a bucket of no money if what happens?
If no one takes the loan.
No, people are taking that loan. People will take that loan. But what is the risk of taking that loan?
Oh,
They
it's
could
Carnival
lose all
Sauce.
their ships.
What'd you say?
They're gonna lose all their ships.
Well,
Yeah, Carnival defaults.
they will only lose their ships if they default.
Mhm.
So as of now, I don't know their risk of default. You know, I don't know their profit and revenue. and expenses. I don't know how much their expenses are dropping since they're no longer really operating, right? So all we do know is that they have $3 billion in a credit line that they just tapped into, and they are going to get ready to sell $3 billion worth of bonds at 12%. So what we do know is that they need $6 billion. What we don't know is if they'll pay back the $6 billion. Make sense?
Yeah.
Well, what happens if they can't pay it back? It's called what?
A default?
Yes, so they'll be defaulting. All right? They'll be defaulting on their debt. If they default, we get down to their third bullet. That's when their debtors, which would be whoever gave them that credit line, other loans that they have outstanding, and I guess whoever owns their bonds, would go after all of the assets that they have. They'd go after all of the assets that they have. And then if they do actually go bankrupt, then you sell all their assets and, you know, everyone gets a piece of what they had. You probably won't get all your money back, but you'll get a piece of it back. That's how this works. So this ties directly into what we're discussing in terms of, you know, corporate debt, because this is what's happening today with one of the top cruise lines in the world. All right. Any questions on what you guys read? Real life stuff, guys. Told you. No questions?
I have a question.
Yes. What's up?
So where's the $3 billion like credit line coming from? Like who's providing it?
That I don't know. So I'm not sure who's offering the credit line. It could be any bank. It could be Goldman Sachs. It could be JP Morgan. It could be an individual investor, right? It could be anyone. I'm not sure who, to be honest. All we know that they do have a $3 billion credit line that they're tapping into.
Okay.
Maybe a quick Google search. Carnival Cruise 3 billion credit line. I doubt. Let's see. Shareholder Carnival Cruise. No, now you're getting like Carnival credit cards and things of that nature. Nope. Don't want to waste time on it either. But if you find out and you do some research, please, Nate, let us know. But as of what I can see right here, what we do know is they're tapping that credit line because they need $3 billion in a loan, and then they're also tapping $3 billion in bonds. That's a big deal. All right, so $6 billion they need. If you would, how many of you think that they're not going to be able to pay this back? Let's be honest. How many think they cannot pay this back? Put a 0 in the chat window if they can't pay it back. Man, for real, that means you think they go bankrupt? Man, you guys are crazy. You guys have no faith in capitalism and socialism. Okay. Type a $sign if you think they will pay this back. No $signs? If you guys think that they'll pay it back, no problem.
Can they just leverage the loan again?
Yeah, so that they can do also, Serena.
Yeah.
In 3 years, when this bond is due, they can also just take out another loan to pay for that loan. Definitely an option. Right? So they can start leveraging more and more debt. Now, here's the issue. What if I told you a normal cruise would cost you $3,000 per person? Now, what if I told you I can get you a cruise next summer on Carnival Cruise Lines for $1,500 per person. Type a 1 if you would go in the chat window.
Wait, can you repeat that again? I didn't understand it.
A normal cruise would cost you about $3 to $4 grand. If I told you I can get you a cruise ticket next year for about $1,500 to $2 grand instead of about $4 grand, would you go on the cruise next summer? Type of 1. Ham wrote 111, so he's bringing the whole squad. Okay, Mary, I would love to hear from you, Mary. Why did you put a 1? You don't have any fear about this virus? Ethan,
I put 1 because
no. Sorry, go ahead.
Hmm?
Go ahead, sorry.
you're saving a lot of money.
Yes, but you're still spending a lot of money.
But would I get a refund if I don't go?
Well, I mean, you theoretically would, but would if they had the cruise going, you would have to go. Otherwise, you would just get a credit. You wouldn't get a cash refund.
Wouldn't that be fun though?
Well, I'm asking you, would you go? Do you think that the coronavirus would be a risk to you next year?
I think I'll still go because if I could get my credit back, then wouldn't I just save it for like the next year or whenever the coronavirus is gone?
Okay, so what Mary's clearly saying to me is that I think that at some point this will be done and it'll be safe to go on a cruise. Is that kind of right? Yes. So if that's her assessment, why would you guys think that they can't pay back this debt? All they need to do is float for the next 12 months until they can start doing cruises again. And then you guys just finished saying that you'll get on a boat. Ethan's not going, right? Jonathan may not pay full price. They'll give you discounts because they know that locking all these people on a boat is going to be scary still, right? So with that thought in mind, do you guys still think that they will default on their loan? Anyone? Type yes if you still think they'll default within the next 3 years. Will they default? Wow, still got a whole lot of yeses. So you guys really think Carnival Cruise Lines is going out of business, huh? I will challenge you guys to find out, not necessarily right now, I will challenge you guys to find out what is their expenses and what is their income. Okay? What is their expenses and what is their income?
So I did research on that, and
Oh,
what I
okay.
found was this is for Sonaga. So in 2019, they had a revenue of $20 billion
Okay.
and a net income of $3 billion. So yeah, I do think they're gonna be able to pay it back.
So you do think they'll pay it back?
Yep, I changed my mind.
Wait, Prasanga, but then again, that was before the coronavirus. So, I mean, that's assuming that everything goes back to normal, let's say in the upcoming years. Like, I think their financials will be like significantly worse simply because of the fear behind like trying to like go back to a cruise when they're like more susceptible to a coronavirus.
Certainly, but I think they'll be able to bounce back. I think that
Mhm.
people are going to be more fearful because of the fact that something like this happened, but over time, people go back to what was normal and what was before. And I think if they're able to float for, let's say, 5 years, they'll survive.
Interesting. All right. Ham wrote that nothing will be normal after Corona. This is going to be interesting to see. This will be interesting to see how this plays out. I don't think
But-
anyone's really sure So it's a bet. It is a risk. Giving them the debt is a risk. Buying their bonds at 12% is a risk. And Daniel just said they have 19 billion in debt already. Dang, that's a lot of money. So add 6 billion to that, you're looking at 25 billion in debt.
And that's above their expenses, as Prasanga said.
I think it's also interesting. I found like a latest article that says they still have like 6,000 passengers on their ship still, because Florida wouldn't let them like get off the ship, so now they can't let them off, as well as the workers, until like the end of April.
Really?
Yeah,
That I did not know. Oh man.
I just found an article on it.
Well, I mean, I think we can agree that that cannot be good for business. So we'll see what happens. But this is about corporate debt. You know, this is what's happening now. A lot of these businesses, they're taking on additional debt in order to either survive or to try to grow. All right. What is the right decision? I'm not sure. Can they pay it back? No one is ever sure. That's why they have to pay interest on their loan. That's why they pay you interest on loaning them money via bond. And then it's a gamble. This is like educated gambling. You never know. Okay. So let's move on to, actually, let's do this. How many of you guys have ever been to China? Okay. If you've been to China, have you ever been to Luckin Coffee? Or heard of it? No? Okay. So Luckin is basically trying to be the Starbucks of China. This is what their stock did today. It's been trading for the past couple months in the mid-20s since they IPO'd. Today it dropped 70%. Turns out they were lying about how much money they made. The COO fabricated $320 million of sales. Fabricated, made them up. Company is down 73% today.
Wait, Mr. Power,
Yes.
how do you fabricate your revenue if you don't have evidence?
Great question. So Subhan can actually go into his Excel charts and change the numbers for the finances of your company. He doesn't have to go by the formula. That is not hard to do. I'm assuming that's kind of what they did. So why would you do that is a question. And is that legal? Tasneem, 100% illegal. Right? It's falsifying documents. Yes. So like Subhan said, because clearly Subhan has done it before, Subhan said you do this so that you look good. So who do you need to look good to as a public company?
Investors.
Investors.
Right. And the best way to look good is if you say you're increasing sales and hope no one finds out.
I have one question though.
Yes.
So if you did that, wouldn't you have to pay more in taxes because you're reporting more revenue than you're actually earning?
Interesting point. Your taxes are based on, right, income expenses that you report to your government. What you put in your earnings report, I don't know if they check those documents side by side. So I'm assuming what you tell the government and what you tell investors can be different, and maybe they'll look at the papers side by side. Good question. But in theory, yes. However, would you want to pay a little more taxes and get a whole lot more people to invest in the business, or have no one invest in the business and not pay taxes? Like, that's the argument here. They lied about sales in order to get people to buy the stock and invest in the company. And look, here's the stock. $19, $32, $34, 50, 40, 40, 35, and then within the past month, from 41 all the way down to $6 now. All right. So is he getting arrested? I believe so. All right. I believe so. Just interesting. Again, you're talking about debt loads and corporate debt. So imagine you have corporate debt and now you have a scandal on top of that. It becomes a very scary situation. So a lot of this is happening. You have a lot of companies that are lying about things. You have a lot of investors that make decisions, and you have people that are trying to guess the right investment to make. And sometimes you never know, just like this. All right. Is he getting arrested? He's getting investigated, which will probably lead to somebody's arrest. Real quick, I know we only have about 10 minutes left. I want to jump down into your corporate debt assignment. Yesterday, we discussed figuring out debt levels companies have. You can do some in-depth Google searching. You can also utilize MicroAxis, like we discussed yesterday, which would provide you some data on corporate debt. All right. That is an option for you to do in order to finalize parts 2, 3, and 4. Part 1 also, that is all due by Friday, Saturday, Sunday. Okay. Then the following week, you have this activity to do. All right, corporate debt. So, Prasanga, you found another website that has good information. What's the website? I'll put it in here.
It's your macro trends. That's where I got the data for the carnival. Thanks.
Microtrends?
Yep.
Microtrends.com.
.net.
Nope, .net.
Basically, we have to search the company, and then it gives you like a set of data. I think you just click the link.
Nope, I got Flex TPA. Can you?
It's macro trends. Macro trends.
Macro, I said micro.
Oh.
Got it. Great. Premier search platform for investors. Not bad. All right, so you guys can take a look at this one also. Good find, Prasanga. Thank you. Let's again look further down into your assignment. So I did tweak it slightly. I did try to make it clearer for you guys. So Goldman Sachs and the Federal Reserve are what this is basically about. This is your springboard. Looking at these two statements, you will come up with a hypothesis, right? Based on that hypothesis, you'll put together a presentation. It has to be about some form of corporate debt or risk and the economy. It can be on anything, all right? But it has to be based around these two statements gave you a thought. All of our discussions on corporate debt is giving you a thought, right? Is corporate debt going to end up giving the United States the highest unemployment rate ever? Is corporate debt going to result in 10% of businesses defaulting on their loans? Is corporate debt, are corporate debt levels going to result in junk bonds, causing, investors to lose, 20% of their portfolio because these companies aren't going to be able to pay back their junk bonds? Whatever your hypothesis is, all right, using everything that we've discussed, that's what your presentation's on. So it's a slideshow, one cover page, one hypothesis slide based on the headlines here. Okay, so this would be your starting point. Either you agree or disagree with one of them, and then you'll elaborate on that hypothesis. A minimum of 6 to 12 slides of data, no opinions, at least 5 to 10 unique data points that can all connect. 1 to 2 of these slides, an additional 1 to 2 slides will be terms, right? So at least 4 to 5 terms you're using, whether they're from this list or another list. one slide with formatted citations, and then one final slide that basically, was your hypothesis correct? Did all the data you find back up your hypothesis? And why or why not? All right, so don't just look for data to prove you're right. Look for any data available. And you're making an educated guess right now about something. Then you're going to do all this research. Then you're going to go back to your educated guess in your final slide and decide, were you right or wrong? How and why or why not? Okay, now, to look a little deeper into this, I do have a slide that I did have a former student do last year to show. Can you guys see this?
Yeah.
Yeah.
So his was about basically about Trump in the economy. So his thesis was, as seen in economic trends over the past 100 years, blah, 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 blah. U.S. economy improbable highs, blah, 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 blah. The economy will crash within the next 2 years as a result of overestimated growth, peaking national debts, and then the departure of Donald Trump. His next slide, he gives a background of how Republicans have impacted the economy. So the crash of October 1929 with Herbert Hoover, investors lost $40 billion in 2 months. Talks about the 2006 depression, which started under George Bush. Gives some data and insight on that. Then he starts to talk about the highs in the stock market since Trump was elected. Okay. Then he goes into public debt, and public debt from 1990 to 2018, and see how it's exponentially growing. Leverage loans, exponentially growing. He mentioned Tesla specifically, research and development versus their losses from 2010 to 2016. Then he talks about the New Deal with the China trade war that they were working on. He mentioned why that deal is or isn't important. Then he starts addressing how the states and the countries would be impacted by this trade war that was happening last year at the time. Okay. Then he touched on the markets again. He discussed U.S. Treasury bonds, and then his final thesis. Okay, so after all his research, his final thesis was, if the trade war were to fail, and they failed to make a deal, the stock market will hit a rough patch in that quarter. Blah 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 blah. If President Trump doesn't agree to terms with China, and he insults them on Twitter, trying to remove tariffs from goods. And he starts talking about what they'll do to impact the treasury market and bonds. And then that Trump will no longer be in office as a result. Here's his sources. All right. You guys can do, this was a little bit all over the map for me. Okay. When he presented it in person, it was much clearer. The difficulty you're going to have, though, is you're not delivering this in person. You have to submit a presentation that is clearly visible without having a script, because you're not pitching this. You're submitting the presentation. So in order to submit a successful presentation, you have to have a combination of content with imagery. Just showing this image for this presentation would no longer be enough. Specifically, because I don't know what you'd be trying to say here. Does that make sense?
Yes.
Yes? No?
Yeah.
Okay. So the direction you take, now he went from 2 recessions to the stock market to he went leverage loans, personal debt. Then he talked about Tesla. Then he went to the China trade deal. Then he went to the stock market again. Then he went to U.S. Treasuries. It was very all over the map. So he tried to really touch on way too many things. I need you guys to be a little bit tighter in your thesis, and I need to approve your thesis as well. So what I'm going to do is I'm going to edit this right now. And what I'll do is I will also update this that activity 2 I'll tweak this just a little. Give me 1 second. So we'll make this activity 3. And we'll make this April 6. Submit your thesis for activity 3 for approval. I need to approve your thesis prior to you being allowed to continue with the assignment. Okay?
How do we submit it?
You'll submit it right here.
Okay. As well as the slides to edit it?
No, I'm not checking your slides. You can submit your slides when you're finished with your assignment. I will check your thesis.
Okay.
All right. Once you guys have a thesis, you guys can, your best bet would be to post it, but also post it here and follow up with a text to me with your thesis. All right. If you text me your thesis, it'll be a whole lot faster. All right. So you can respond back to me and remind, or you can text me if you have my personal number, whatever you guys want to do. That'll be the fastest way to do it. Then you can continue with the rest of the assignment. I just need to make sure your thesis is clear and makes sense. This thesis was not very clear because it wasn't enough about debts. And all of a sudden we started talking about treasuries and the trade war, and it just was way too much information that didn't have one single common theme. Okay? So it is going to be well explained, similar to this. It is going to have charts and graphs similar to this, but you're going to have to do it all together. Okay? Because, again, you're not presenting it orally. You're going to be submitting this to me via your link. So I have to be able to know exactly what you mean and what you're saying. Questions?
Wait, so is the thesis your hypothesis or your final statement?
No, no, no. So your original hypothesis. Hold on. There you go.
Mhm.
Okay. So your original hypothesis. So you read this, you had all our discussions that we've had, and then you come up with your hypothesis. Now,
Okay.
these two, now I know we're, our class is finished, right? 12:15 or 12:20?
12:15.
12:15. So if you guys have to go, you can go. If you don't have to go, really quick, these are the two separate terms. Risky corporate debt has reached a peak and is a threat to the economy. That's what Goldman Sachs says. The Federal Reserve says corporate debt does not yet pose a risk to the economy. This was last year. This was not last week. This was exactly 12 months ago. In the past 12 months, we have seen interest rates go to zero And a lot more companies take out a lot more debt. Right? So if this was the argument then, I wonder what the argument is now. So I'm going to let you still use this, but just remember, this was from 2019. Okay? If that plays into what you want to say, that's up to you. If it doesn't, it doesn't. That's fine. Any questions or thoughts?
You mentioned in the instructions to have like the citations formatted. What kind of format? MLA?
MLA is fine. Yeah, MLA formatting. We'll do that.
Okay.
MLA, perfect, done. I'll save it. Done. All right, and there's citation websites again we've gone over that you guys can do that from. Should be easy. No questions. You guys are pretty good. Tomorrow, again, we have Mr. Hood. Make sure the do now for today is done. That'll be your attendance. It's also your questions for tomorrow. And then you do have a do now, do tomorrow also, which I suggest you do tonight. All right, guys. If you guys got nothing else, I'll let you guys go. If you know your thesis, you've already started doing some work on it, feel free to shoot it over to me, and I'll acknowledge it as soon as I can. Good?
Yeah.
All right, guys. You have a wonderful day. I will see you mañana.
Thanks,
Thank you,
Mr.
Mr. Power. You too.
Have a good day, guys.